Have we just seen the beginning of a big sell-off? The Magnificent Seven just shed $233 billion in one day, and it leaves all of us asking whether this is the beginning of a waterfall moment. We've got the charts that you need to be looking at that will tell us whether these zones are critical, and of course we'll be talking about the apple souring when it comes to a double top and what that's projecting. But more importantly, there are stats that are starting to appear in markets showing that we might be going into a slowdown in momentum. And with Bitcoin losing a lot near the all-time high, we know that we have some reads on previous times that this has occurred. But it doesn't just come from that point. There's also abundance and huge amounts of opportunities in this market. And gold could just be heating up for a huge breakout moving forward that probably not enough people are talking about. Join us as we cover stocks, commodities, and cryptos today. Well, welcome back everyone to the Daily Show where we talk about markets around the world. We've got an amazing set of data coming your way today. My name's Tom, and if you haven't already, make sure to subscribe to the channel, but also our free weekly newsletter. We put one out just before the Tuesday Open, and it had some amazing defensive discussion, and of course, those were the sectors that were doing the best on the day. Fear and greed index, what's been happening in the markets? Well, it turns out that we went from extreme greed all the way down to greed in one sell. Now, is it enough to get excited about for the bears? We'll go through that later on today's show when we look at the key levels. So over on our X account, we posted something that I think is really interesting. A bear market is technically defined by a 20% decline in share price. And of course, Tesla has already been over 20% from its peak. Apple, though, on top of that, has now entered almost bear territory, 5% away from a bear market, Google being the same. Imagine if Nvidia falls through. And of course, the 20 daily SMA, a level that we all need to be watching very closely on the S&P 500. We'll cover that later on in today's show. Let's talk about global CTA movements. We've been discussing this for a long time, and Goldman Sachs have just put out their newest projections in terms of what they think CTAs are going to be doing. Of course, it doesn't seem to have much convection to the upside. Basically, it looks like everything is usually sell, sell, sell. We saw this about a week or two ago. Nothing really happened. But as we will be doing on this channel, we'll be tracking the CTAs so that if we see them dropping, we'll know that it's probably more of the real deal. What we want to see is CTAs dropping, 20 moving average being broken, and of course, a huge switch to negative gamma, which we'll be going through in options markets over the next week. Supercore inflation will be the discussion I think that everyone will be thinking about when it comes to Jerome Powell this week. And do remember, he's talking multiple times along with the jobs numbers. So expect volatility to spike quite a lot over the next 24 hours. So the question for both bulls and bears out there right now is, will we actually see seasonal weakness? So far, we haven't seen any of this, but today might be the opening that bears need. As we know, this is the period of the most weakness if it is going to occur into the OPEX, the third week options expiration, and there are a few reasons why it might be happening. Number one has to do with complacency. Of course, we've seen yields go up, markets go up with them. We've seen bonds start to float down, and of course, the stock market to go up in itself. And if everything here starts to crack and break, then out of nowhere, like a click of a button, we'll see some waterfall style moments. Some of these big things that are happening is, of course, the overall FOMO in markets. And I think that really is exemplified by Bitcoin right now hitting its all-time high. Hey, I'm an absolute bull, and you could almost call it a maximalist when it comes to Bitcoin compared to all the other cryptos. But at the same time, when you go vertical, especially when you're hitting new all-time highs and everyone's on board, there is usually a sign of weakness that's about to be coming around the corner. We've seen this a few times when we look at call options with buys minus open sells at the open. And we know that we're at that period which led to the selling back last year in July and August. Will it be that way again? We're going to need some triggers, which we'll look at later on. But let's talk about Bitcoin, because I think that this has just hit a very critical zone. Now, all-time highs are incredibly important for Bitcoin. We don't have too many reads, but when we tend to go into a massive rally, we hit an all-time high and then we drop over 5% in one session and hold it, then we tend to see a weakness period. So we've talked about this for a little while, and you might say to me, well, Tom, you said the other day that when you move up 18%, the stats are sideways to down over the next couple of weeks. Well, as it turns out, we actually fell straight back down to that level just in the last 24 hours. So it does pay to be very good with your convictions. Obviously, you're trying to stop an absolute freight train, so it can take some time. But the evidence is weighing on the idea of an all-time high and these types of falls. You can see here that everyone's buying Bitcoin for one reason, well, maybe three reasons. ETF, obviously, I really agree with that concept. Seasonality, and then of course halving cycles. And yes, there are many other reasons out there, but realistically these are the big ones that everyone's using. Do we expect markets to do better around this period of time? Yes, we've seen it before. Halving periods are well known to do this, but you'll also notice that halving periods often go sideways to down after the actual halving period and then really accelerate about 6 months later. This could be the exact same thing, the exact same time, and everyone seems to be ignoring it. Another one that's a stat that we've been reading out a few times has been Nvidia. Now, this has not been working. Nvidia and chip manufacturers, while they've slowed a little bit, specifically Nvidia, it still hasn't weakened. And of course, this was read out at around $790 in the stock, and we are now trading at about $850 to $860. What tends to happen around here is we go into a holding pattern, and I still believe that's more than likely based on the types of weakness we're seeing in markets around the world. But if you're an Nvidia kind of fan, girl or fanboy, and you're looking for it for the long term, I don't think you need to worry too much. Obviously, we are estimated to need something like 7 trillion chips or something like that over the next decades, which is pretty wild. And we do have, of course, that longer term bullish stance on markets. So even if we get a correction, the facts are that we've got some amazing bullish stats for these markets, 25 and 0 by one of Wayne's studies, which is pretty big. So we mentioned CTAs before. Have we seen any switches in their sentiment? We haven't got any new reads, but we do know that they're at extreme reads already, which is basically the top of the top in terms of when they're positioned. We'll get back to you though if we do see any switches. Where we have seen some strength that's led on to some nice price action has obviously been Brent. We've also been talking about it with gold. And I just want to reiterate that gold's at a really important point here, but specifically something I've been talking about with our Market Masters group has been not just gold, but also gold stocks. Ratios are important in stock markets if you're going to find opportunities. And right now, we have one of the worst ratios we've ever seen for gold stocks versus gold. Could it be an opportunity? Well, you've already started to see a move on them. And of course, we've been talking about it a little bit. Let's move over to the options and unusual volume activity that we've been seeing in the markets. First up, we've got the S&P, and we know that we just closed under a fairly important zone. But of course, we will be approaching this 5,000 with a lot of caution. 50-50 is a huge TA level, and 5,000 is a huge options level. And there are some levels that we need to be watching over the next 24 hours. Now, Qs actually started to bring in some puts. You can see here a little spike up in the amount of puts coming through. And this becomes important because if you know anything about sells, they have to continue on fairly quickly. We will be wanting to see new lows, and you'll want to actually see them start to stack to turn into a negative gamma environment. You can see here put activity really did increase on the Qs compared to the calls overall, and this is in stark contrast to what we've had in general across the market recently. And we're needing to see some big switches here. Some notable levels are coming up, and we'll go through those notable levels right now. Where we sit at the time of close, 435, that's going to be a very important point for the Qs, and we'll look at that later on. And another big zone is going to be around that 440 zone. A break above 440 could expose a buy the dip type mentality. A break below 435 might continue the sells. And then, of course, we'll look at the technical levels along with the options. Here are some other levels that you might be wanting to look at in terms of just in general on the markets. And now let's go over to the overall unusual volume activity. We've talked about treasuries. We do like treasuries at these zones. Of course, we know Jerome Powell's coming out. Jobs numbers are coming out. If we do start to see weakness in the economy, we are most likely going to see yields drop off. That's going to be great for treasuries. We haven't seen that yet, but it's starting to come through with the market trade. We also know that there were large trades putting through on the Qs the other day. This was only 2 business days ago. So realistically, someone probably sold as the action so far has been to the downside. We also know that home builders in general are getting a bit of selling on them. And while it's early days yet, if we do tend to see big sells on home builders, which we've had before, these are points where we need to be watching on markets. Remember, home builders and transportations are very important to watch. Still a whole bunch of earnings coming through that is always key. And I'll just quickly scroll through the key bits of news each day. You can pause the video here if you're interested. That's Wednesday, Thursday, and Friday. And of course, these are the major economic information that's coming through. We'll go through that at the end of the video as well. Let's talk rotation now. It was a day that was strange. Energy was up. Okay, that's fine. Utilities was pretty much flat after having a great open. And then regional banks was up 4%. Now, that's pretty surprising. Obviously, anything to do with semiconductors, tech, and the Mag 7 was down across the board. And that takes us to a 5-day movement that looks something like this, with gold miners really smashing it. 10% up, well bettering semiconductors overall, and regional banks, thanks to their 1 day of move, coming back up. But you'll notice a couple of big moves here. In particular, we have utilities coming out of nowhere, and that remains a very interesting sector for us on the show. Even though it's super boring, it's like watching paint dry. If we do see utilities continue to strengthen and we hold the zone and then suddenly we break through, remember 3 days is the key. And a lot of what you're looking at as well is you want to see whether the market is selling into the close or buying into the close. Today, we've got a neutrality, I would say, on the markets. Let's move around to options. What have we got going on here? Huge options recently, 45.8, 56% calls. And as we know, retail was making up 30% of the single legs. The trades, well, they were all where you would expect. Huge moves through so many of the major markets, including, of course, what we've got here on SMCI. And we've also got some big moves going on in everything to do with Nvidia, Tesla, and of course the Qs themselves. 1.29 times average volume with an equal level of calls and puts. Very interesting to see that here. While the S&P 500, you'll notice, is more put skewed. So yes, we've seen an elevated level of puts come through, but still a lot of calls with the buy the dip mentality being so strong in the Qs across the board. I think if we break those key levels, it's going to get fierce. What zone do we need to be looking at on the VIX? Yes, we've brought it back, 16. Until it's above 16, you're not really sure that the market is actually reaching fear. And of course, we've struggled with this level a few times. Every single sell so far has been stopped around here and the 20-day moving average, which we'll look at soon. What about the overall yields and what we've been seeing in bonds? Bonds, the actual risk here did drop off, showing that it wasn't necessarily a huge amount of freak out yet. We're still looking for it to get above this zone here. So that's one that isn't really going with the overall weakness in the market. We have liquidity from central banks remaining elevated near all-time or near the highs here we can see across the board. And of course, we have yields hovering, waiting for Jerome Powell and the jobs numbers. So 2-year and 10-year, you'll want to set alerts for new lows under 4.5, and you'll want to have also new alerts above the highs. When we break out either way, it's probably going to move the markets quite a lot. When we go over to Dow Jones Transportations, though, we can see that it's starting to lag. It's not making a series of higher highs and higher lows like you would expect when a market is healthy. Instead, it is consolidating. And of course, if we breach to the downside, then that's going to be very negative for markets. Home builders, also worth watching. What about our bond indicators? Well, the bond indicator weakened, but it didn't weaken enough to break through this zone. I would probably think that we're going to see weakness on the bond indicator at the same time that we would go through a 20-day moving average. So if both of those happen at the same time, it's probably a catalyst that there's a bit more serious movement to happen in these markets. Of course, we'll be monitoring that closely. US dollar did weaken a little bit, still hovering around the same zone. Again, jobs numbers, pretty normal for it to sit here. And the Euro USD remains that kind of stronger trade there. But let's talk about the shiny metal gold. Opportunity has been here this week, and it really has been pretty nice. Ultimately, gold doesn't move the percentages of a crypto, but you can see after that breakout, we're still up about 2.28. Gold stocks have moved a lot heavier than this, and we're approaching an all-time high level of 2150-ish. So if we breach through, where could we go? Well, we've talked about it a while, especially if yields start to fall off. I wouldn't be surprised at all for gold to break a new all-time high, to start to really move up heavily. And there's a real potential here for this metal to go towards 3,000 over the next 12 to 18 months. So it's interesting. Weekly close will be important, but I would think that there's buyers across gold right now. US oil, some struggles here on the oil market, whether you're looking at Brent or oil. Although we're at that 80 period, we did want to see this kind of hold up. And it's right at that zone where we need buyers to really recommence to buy over oil. Now, it's still holding the series of higher highs and higher lows in general. Of course, unless we go below 75.70, we're still in that kind of upward trend. But this is still a very critical point, and you can see it interacted with the 80. I'd like to see a breakout even further here. So currently, the trend is up and still holding. It's probably waiting for that big news. Same thing here for the USO versus the SPY. No incredible breakout here for energy stocks just yet. but we will be watching very closely. Let's now move over to some single stocks before we go through indices. And Tesla got obliterated again. Well, we couldn't really have been bullish on it, unfortunately, once it broke through here. That doesn't change my opinion on Tesla for the opportunity in the future, though, if the AI side comes through. Now, I think the biggest problem is going to be manufacturing. Elon recently mentioned that he's having problems, or at least there are going to be problems with manufacturing these humanoid robot AI kind of things to collect data. So they're only talking thousands instead of course, what you probably need to be doing, which is hundreds of thousands and millions. So Tesla is struggling. There's no doubt about that. It's back down to its most traded zone. But for longer term investors, possibly you're starting to get excited about price. From the current price action, you'd say there's more to come. Because even though it's smashed into the most traded zone, there's a very real reason that it could go back to the possible return point or even a little bit worse. I remember this zone very well because, of course, we've spoken about this many, many times in the past. But weakness is in the stock right now. Once it took that lower low, there's not much you can really do about it. Nvidia, on the other hand, is holding the 860. If this stock starts to tumble, you've got to watch out. It's been a very strong trend. Nothing's been able to stop it so far. And of course, we'll be covering it more, but nothing to really report back yet. Same thing with SMCI, a lot of wild movements here. Quite difficult to trade if you were trying to day trade it, just because you might say, well, it's just buy the dip, man. Yeah, but be very careful around these highs. I'll stick to my kind of guns here in terms of saying that in general, I would expect after this type of sell for the market to hover around the same price in the future. So I'm not thinking it's going to go up a lot, but that's the statistics. Sometimes you'll lose out of these 2 out of 10. And just because you might have an opinion on it doesn't mean there is an excellent trade on it. Of course, the first initial buy the dip rally, absolutely very good. Here's where I usually would have been turning negative on this stock, but I'd never do it with selling the stock itself. You'd have to do it with an option, and you'd have to do it with a lot of protection because, of course, the implied volatility was too high. So you'd need to be able to mitigate that a fair bit. We'll see what happens with SMCI, and I'm happy to continue to follow along on that story. Let's now go over to Apple. Double top is what everyone's probably now drawing on their charts, which is this. And if it does breach through this important level of 160 kind of 8, then you could be looking at a real sell here in Apple. Of course, the growth engine of Apple has always been iPhones. The sales are slumping. If we go back to 135, would you pick it up at these prices? Let us know in the comments down below. 135 for Apple. Would you be excited at that price? I'm sure a lot of you would, but it's starting to look really weak, and you can see here that for some buy the dippers, they'll be really happy with this zone. Magnificent 6-7 time, you can see it's starting to weaken. No break through the 20 moving average though, which has been holding ever since, you can see here, December. So really it's held pretty much since the October lows. You've just basically bounced the whole way up. So this is not the exact Magnificent 7, but you can see here that it's doing very, very well still overall. Gold miners, nice zone. Didn't quite break my 29.20, which would continue to strength here. So I can see why there's a little bit of selling. Volume spiked. Looks pretty good on the charts. Certainly doing a lot better. Google's another one that everyone's watching at this stage because, of course, it's been falling off a cliff as well. It's found a little bit support around 130-ish zone. This is probably normal. You can see here that we've bounced once, twice, broke through once, bounced again, bounced here so far. A lot of people, I think, are going to be looking for that 120 zone on Google, but already you're getting a significant discount. As we said, you're sitting at about 15% down, another 5%, and you'll be looking at negative 20 overall, which will be, of course, a technical bear market. Often when it enters into technical bear markets, that might be a good time, though, for it. Let's move over to Chinese stocks. They're not faring too much better. 16.2, really just hovering right on where we'd like to see it hold. Of course, I don't want to really go with more momentum plays until we move through 16,750 because that's really going to show that we've got a higher high coming, and the Lunar New Year is now well and truly over. So that initial rally that happened through Chinese stocks into the meeting, that's now gone. I still think there's good prospects here, but at this stage, it's suffering like the rest of the stocks are in the current market. Let's move over to the Aussie market here. Break up. Little bit of a breach down. For shorters, you're actually going to like a lot what you see here. The weakness that you're seeing around that 7744 is kind of real, I guess. And if we do end up breaching up to here, this probably is going to be where sellers are. At the moment, I still think the Australian market can do well because of its overall breach out and the weekly close. But yeah, it does have some little signs of weakness on it. And I still think that even if you were a seller at around 7,650, you're going to have still some problems. Let's move over to the US 2K. So I mentioned in our Market Masters Club, I thought 2080 might be a sell zone if you were going to go with the day trade. It didn't quite get there. And then, of course, it sold off. Yeah, look, 29 is always a big zone for us. We know it's a supply level. Everyone's been talking about Russell 2K breakouts. I don't think it's quite yet broken out. Is it really worrying yet? No. I mean, we're just in the ascending channel here. So you can see that we're up, down, all around. Let's now move over to the Qs for a second here. So we'll go to Qs first and we'll load them up. And you can see that the Qs have come back down to the 20 moving average. Now they have breached it before, but generally they've found bulls straight away. This one was notable though. That was the false break that we got back in January towards the weakness. So far it's been, a pretty, like maybe a false breakout, you would almost say, to the weakness side for the Qs one time. We do have a key level of support, which is that 435. We know that options sit around that 435 as well. So if we do end up closing underneath that zone, I think that's probably showing you an early warning sign. We do need the S&P 500 to come with it. And also the chart that we often have on this one, which is this is the Q versus SPY combo channel. If that takes out the low over the next 24 hours, I think all of those things are pointing towards weakness in the market moving forward. When we go over to the US 500, you can see the 50-50 zone, the daily 20 moving average. This thing has been an absolute beast, multiple times holding up. We know that that would make a lower low. We know that would break through the 20 moving average, and that's probably a very significant level for the bears. It also would need to happen relatively quickly because, as we know, with the amount of puts that have just come in recently, we need them to start kind of chugging along. Otherwise, they can actually act like they have in the past as a barrier, and it leads to, of course, markets moving up. Let's now talk about Bitcoin because, of course, we got one of our first signs of sideways and read kind of zones that was showing weakness. Then we ended up falling from this zone all the way down about 14%. Now, that's normal for crypto. Bitcoin loves doing this, and usually it marks a peaking point for now. Now, they can be over fairly quickly, but I would think that Bitcoin's going to take a breather. There's even possibilities back to 50K for Bitcoin at this stage. So you just got to be really, really careful about this. As we know, when we've seen it previously happen in the past, it does tend to lead into relatively significant sell-offs. So you can see that we've topped in before and then we've kind of sold off. We've topped in before, sold off, and it can happen for, as you can see here, just a few weeks, but they're not insignificant moves. I mean, back here you saw about a 30% drop, and I think between 20 and 30% is what you have to expect. So far we've done about 15, wasn't it, from crypto. So if we go to here and we kind of measure out here, yeah, that would make a decent amount of sense. Now, most Bitcoin traders are going to say, no, Tom, it's going to the moon. Hey, maybe it will. I'm not sure if I'd short Bitcoin here, but certainly there could be a good opportunity on the horizon for you. Now, Ethereum traders are going to be like, well, is it going to count for me? You'll notice there's a lot more elastic demand in the Ethereum pickup. The thing about Ethereum is that, of course, we're moving into that ETH/BTC kind of combo at the moment. So the ratio is improving. We first talked about this the other day when we broke out. Of course, yes, Bitcoin beat out Ethereum. Not by that much now, but it did beat out Ethereum. But yes, this was a huge trend change. And obviously, we expect eventually Ethereum to start playing catch up. That's the first alt that goes off. And Bitcoin can actually weaken here, and then we can see the transfer to the other coins. Something to watch on the charts moving forward. Just a quick reminder, subscribe to our socials if you're interested in what we're doing. Thank you so much for the support recently. It's been amazing, guys. Give it a like. Thumbs up the video. It does take a long time to go through all the content, bring it all for you. So if you can thumb it up and subscribe, that would be much appreciated. And do remember, this week we have big data. So of course, Fed Chair Powell is coming out 10 a.m. New York time to annoy us all. Then he comes out again after the ECB press conference on Thursday. And then we have non-farm employment change, which is often the number that triggers a lot of things. Just remember with non-farms, if it's your first time to non-farms, often the market will go the opposite way first and go grab liquidity, and then it would go the way afterwards that it really wants to. That's because of the way the data actually comes out. Thanks so much, everybody. We'll see you in the next one. Bye for now.